Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here for NTMarkets.com with your Wednesday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what we saw yesterday was, it's a continuation of this dynamic that we have seen. The bulls cannot close the deal. The bears cannot close the deal. We make new highs yesterday up at 2119.75. Then, 2 days ago at 2019.75 on Monday. Yesterday, we continue the breakdown from Monday afternoon where we lost, after the new highs, recall, we lost daily pivot, we lost 2106, and we closed below the weekly pivot. Yesterday morning, the bears had what they usually need to make a big move, which is news. We tested the weekly pivot up at 2103.70. The weekly pivot went resistance. We then started to head down. That was fueled by this Iranian ship seizure type of a deal. Moved down to 88.5. Those rumors proved to be false. It was one of the headline minefield situations that we discuss in our chat room all the time, where you have rumor X and you go in direction A. When rumor X is refuted or adjusted, direction A tends to be reversed. And what we tend to see is a move back to where the move started, which in this case was the weekly pivot at 2104. You got to break above that. The bears have done what they've done so many times. They give up a little bit of ground. Then they are so traumatized about what has happened over the past 2.5 years that they turn little rallies that they should be rejecting and turning into lower lows. They let those turn into big day-long moves higher, and what you end up with on a daily chart a couple days later is something that looks like a test of the middle Bollinger Band down at 2088.83. So what we saw at the end of the day was we saw a close back above the weekly pivot, back in the area of 2106, 2107. What we're seeing headed now into GDP, we got GDP in about 5 minutes, as we're seeing some weakness. We're back down on the weekly pivot. You got the daily pivot and the weekly pivot essentially locked up between 2103.70 and 2104. So that's going to be a big level today in both directions. As we head into the Fed, I will give you the same speech I've given you guys for years. Don't game the Fed. Don't take a trade solely based on what you think your amateur economic work tells you is going to be the reaction. You don't know what the reaction is going to be. I don't know. You don't know. You have to wait. You've got to wait for the reaction. The technique that we use in the room is we try to find a range after the number comes out. You find a high end of the range, a low end of the range, and you look for breakouts or breakdowns from that range. Or if it wants to stay range bound, that can provide opportunities as well. What you don't do is walk in and bet X on, just bet it on black, and, because a lot of times it's going to come up 00 and everybody's going to lose their money. So you have to be patient. You have to wait for the right opportunity. You have to let the reaction play out. Traditionally, Janet Yellen has been positive for the markets. I think the bears, I said this the last time out, I think the worst thing that the bears can do for themselves is to make the 2 p.m. number a buy. If we continue to head down into 2 p.m., every dip buyer out there will be ready and waiting at 2:01 to hit the buy button. And as you can see from yesterday's tape, you can see what the bears do when you put pressure on their position still. They head for the hills, and little rallies become big rallies, which become sustained rallies, which, essentially become, moves back to highs. If the bears win the day, you want to see the weekly pivot become resistance and stay resistance. If you're going to see the bulls win the day, that same area has to be support. You've got 2106 above it. You really want to see a move, though. If you're a bull, you want to see 2112 get taken out with certainty and held. 2112 has been a problem in Globex. It was a problem yesterday, and that's an area now that the bulls need to conquer with confidence in order to make a move up to, the 23 to 26 area is the next logical place on the upside. Okay, everybody have a great day. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.